Hello. In this video, we are going to talk about market structure, not the simplified version, not the textbook version, but the structural logic that actually moves price. We will break down inducement, false reversals, and liquidity grabs, and how they fit inside real structure. This is one of the most important topics in trading, because if you misunderstand structure, you will constantly trade against liquidity. Today, I will show you the cleanest structural model you have ever seen. A model that explains why price creates fake breaks, why reversals fail, and where the real move begins. Let's start with a simple question. What is market structure? How does the majority of traders see it? We are talking about the mass market, not the top 1%, not highly experienced professionals, but the 95% who react emotionally to movement. Because our strategy is built around that majority, it is built around how they behave. Most traders trade classical swing structure, break of structure, higher high, higher low, lower high, lower low. They see an impulse, they buy. They see a breakdown, they sell. They see a structure break, they enter. They believe structure is just visible swings on the chart, but they don't understand something critical. Every aggressive entry creates liquidity. Every breakout order becomes fuel. They are not trading structure, they are creating liquidity for someone else. Real structure is not every visible swing. Real structure is formed only after liquidity is taken. A structural point becomes valid only after inducement is removed and major liquidity has been swept. In a downtrend, for example, first we see inducement, then liquidity is taken, then the low is confirmed, and only after that the structural high is validated. This is the foundation. Yes, we also use minor pullback sweeps and other manipulative movements, engagement, traps, bait, but we will talk about that in the next video. Now let's look at how the majority enters the market. They see a break of structure, a swing high is taken, momentum appears, then an imbalance forms, or an order block appears. Price comes back to test it, they buy the retest, stop loss goes below the recent low, take profit is placed at the next obvious target, everything looks clean, everything looks logical. But what are they actually doing? They are creating liquidity. All those stop losses below the low become future market sell orders. A large cluster of aggression is building under that level. For a large participant, this is not random. After price moves in their favor, those stop losses become exit liquidity. Retail stops absorb the closing positions of larger players. This is where inducement plays its role. Inducement is not just a small pullback, it is a structured liquidity correction, it has formation rules, it has positioning logic. And we will break that down in the next videos. After inducement is taken, price often creates a false reversal. It pushes up, it shows strength, it invites buyers in. This is engagement. Then the real move begins, to the downside. This manipulation is one of the core mechanics inside the Nightstar strategy. Rule number 1, do not buy, do not sell, until inducement is taken. So the question is, where should we actually trade from? After inducement is taken, the market leaves behind high probability areas. Right above the swept liquidity, we usually see the first valid order block, the first real reaction zone. Why is this important? Because after the market traps buyers and creates enough opposite orders, large participants finally have liquidity. They use that moment to build their position. They sell from the first qualified zone after inducement. This is not random, it is execution. Now, I personally do not trade simple order blocks. Alone, they do not provide maximum probability, but they are a fundamental element of the Nightstar framework. You must understand them before moving to advanced models. There are more precise areas like trading quarters, which I personally use. We will break those down in the next videos. Right now, I am giving you the structural skeleton. Later, we will talk about how to identify these zones correctly based on candle structure and formation logic. Now I want to show you real examples. 4 recent trades taken using the Nightstar strategy. Average risk to reward 1 to 4. More than 15% net gain with only 2% risk per position. These were not random entries, they were structured executions. With deep understanding of trend and proper use of inducement, entries become simple, clear, logical, controlled. When you understand true structure, you stop reacting to noise. You begin to anticipate liquidity. You recognize false reversals before they happen. You see manipulation before the trap closes, and this is only the foundation. These are just the most basic layers of the Nightstar framework. Imagine what comes next. Before we finish, I recommend you join my Telegram channel, IC Trading. The link is in the description and in the pinned comment below this video. There you will find daily analysis, real trade breakdowns, and live examples of how the Nightstar strategy works on Forex and crypto. The channel is relatively new, so there are not hundreds of examples yet, but everything published there is real and transparent. You will also find my free book on the Nightstar strategy. It covers the core structural principles and will help you start testing the framework on the chart today. If you found this video valuable, like the video, subscribe to the channel and leave a comment. It helps the algorithm and supports the growth of this project. Thank you for watching.